What a day in the markets, everyone. Wow. And of course, with today's big Fed movements, what's the next stop for the markets and where are the opportunities? Well, if you like knowing what to trade and how to trade it tomorrow, hey, stick around for this video because I'm going to show you that. Give you guys all the data, option flow, rotations, everything you need. Oh, and also a little bonus lesson about option walls and how they let you just predict stocks. Almost to the dollar. So my goal is to make you a smarter and more profitable trader by the end of this video. Oh, and also for all my FOMC and Fed nerds, here's my expectations so you can pause and read that. Well, let's catch up. Alright, and catching up in the markets, what happened today and what kind of information can we take into tomorrow? Well, of course, over the last few days, we've been talking about that obvious rejection off of the 418 news level. Again, the news level cannot be passed unless if these three issues are solved. Inflation above 3.5%, the Ukraine war resolution, as well as how will a statement of assets remain elevated. We talked about that in the last video. But today with the Fed meeting, we got that 0.25 rate hike. And the reaction off of that by the markets has now told us where the markets are going to go. And not only that, but we're gapping down even more with Qcom's earnings getting hit pretty hard. And Apple dumps, so the market's likely going to continue to dump as well. Alright, but Apple getting hit after hours really shows us where this market wants to head now. And that is down to this 402 liquidation. Looking at our predictive SPY chart here, I'm looking for two scenarios to play out over the course of tomorrow and the next week. And for tomorrow, you really got to be watching if we do push up into the morning and chop on this 407.50 and 407.80 level. We should see this continue and have a nice pop to 410. That's what I like to call a golden scenario, and it's really rare to see these type of movements, especially after a big down day like this, but if it does happen, be prepared to long. Now, the big grandmaster plan that we've been talking about since beginning of May is the 402 bottom. I discussed how this one back here I didn't believe was the bottom in May, and so far this theory is correct. So what we're going to shoot for is that 398 to 402 bottom, and it depends how this plays out, but what I'm going to be looking at is this to kind of chop here at the low, because remember, liquidity was formed back here. This is a big pool of liquidity in here, and the more we chop in it, the quicker it drains and the more we want to bet against it. So if we do start to chop between this 405, 407 area, our game plan and our thought should be liquidation. And if you guys don't know what a liquidation is, I'll put it up on screen. It's based off of the Wyckoff theory, and although somewhat outdated, it does play a principle in almost every market bottom. I challenge you, go look at almost every market bottom. There's almost always a liquidation or a big drop down to bait in all the shorts and liquidate all the longs. And at that point in the market makers feel best to move it up because there's the fewest amount of people in the market. So that's our game plan. We're going to expect chop in here, then we're going to expect that leg down into this 402 area. Now, if we get that 402 level tomorrow, definitely expect 390s. So that's our game plan, but let's go look at the money rotations and see where money's moving. All right, and looking at the big money rotation, where is the big money flowing? Well, at the close, really nothing. Because this week is so dependent on earnings, we have a lot of big names reporting, such as Apple. It's going to be very hard to see any clear trend between sectors. So no real value in the rotations right now. So let's take a look at the option flow and see what we can get there. All right, and after scanning the option flow, this is what I came up with. Now we're going to talk about these trades and the ones I took today, as well as the ones that still have opportunity. But overall, option flow is completely scuffed right now. Because of the earnings, everyone is piling into the earning names. And a part of our flow strategy, earnings trades do not have high edge because they're news dependent, and that doesn't really mean edge is behind it. So let's look at the trades that did play out today and the ones that we can still get value. As far as the TQQQ, this was the derivative one that we saw that was quite aggressive for May 5th, 355K for the 28.5 strike. And this one was in play. However, with this big of a tank today, this one is likely going to be toast and no longer valuable with our current game plan and expectation in the market. So we're going to cross that one off and no longer look to follow that. Now, the next one, we did talk about this, and hopefully you guys took this trade today because I did and made a quick 80% off of this. This was the plug trade. Remember how we talked about if plug flagged on that inner channel, we were looking for a break. But we said that it was likely going to be a fake out. Remember that, because that is always important to remember that a lot of these times in these parallel channels, you do get what's a part of a market maker cycle. I'll put that image up on screen. Again, is a technical structure that is very powerful. Gotta memorize that. It's like an updated Wyckoff theory that's a little more broken. But this trade was pretty basic. We discussed if we did flag or open in this range in here, within that midline channel right here, we were gonna look long. And that was off that flow. Again, as an options trader, it's favorable to trade trade these trending parallels because the stock is slowing down. And when you get a trending parallel down after a downtrend, it means buyers are in control as they're controlling how much the sellers get to sell off. So definitely want to be looking long in these structures, and that's exactly what this flow did. And we said if we did get a break of this high of this channel, you have to take profit. Because again, that market maker is going to grab liquidity and fake you out. So we'll no longer follow that one. And again, the next trade is Nanos, 500K for 510. This guy is the options legend. You guys all know that 50-cent VIX guy. You hear about him all over the news, but this guy is an unspoken legend. The Nanos trader, he always times bottoms for us, almost always. Great trader. And so with this Nanos trade, we're going to be watching this one for the 10. Now, we're not going to go follow Nanos, but what we're going to do is we're going to help use this as what we call an information trade, something to help us with timing a bottom. And if you guys stick around here enough, you'll know that the SPX and NDX, I'll put it on screen right here, help us time bottoms in the past, such as October, which in my trading career, I made the most money off the recent October bottom. So they can help you. But the next one are Tesla and Run. Now the Tesla one, again, I wish this one would have pumped today to that 166 or 172. We were discussing those levels, but something is happening at 165, clearly pushing this stock down a lot. So Tesla, if we can see this pump a little more, we would like to take that short, but the targets for this are 144. It is very low, but eventually Tesla will get wrecked. So again, we're still looking for that pump, 166 or 172. We're waiting for that pop, and then we'll enter short. And the bearish case was supported even more today as this guy piled on for May 19th call. Almost 8 million in calls here. You can see this 165 strike, 165. Again, he's hitting the same strike. And what that tells us right there is if we can get a pop, anything over that level, that 166, 172, the market makers will punish this guy. It's like giving candy to the baby and then just taking it right back. Again, looking for that May 12th or May 19th expiration on these. Okay, and finally Run. Run was actually one that did play out today, I think. Unfortunately, earnings trade, we did say anything off 21. It came up, didn't hit 21. It hit 20.75 and then tanked. So if you did catch this one, again, it's not always about getting that perfect entry that sometimes I catch myself aiming for. It's about just getting in the trade. So should I take in some entries in this? Absolutely. But I did miss this one. So the only surviving flow on this is actually Nano. So we're going to cross out all these other ones. Oh, and for those that wonder, yes, a resort chain imbalance trade is playing out finally. We did short the MGM and win up here at the top, break of the high here. We went through some ugly initial pain here, but finally these things are paying out. These were the contra trade we were betting against the call flow that was coming in as there was a huge imbalance. So when I do expect these ones to chop and then break this low, absolutely smash it. So I think this one's going to be in the bag. Pretty solid trade here. And again, if you guys are wondering why we take these trades, it's because of this chain imbalance here. A lot of calls right here hitting the 120s, the 125s, the 115s. We said anything into that 118, 115 area was going to be short. So look at the open interest here and look at the open interest on the puts. There's absolutely nothing there. You want to favor the puts as the market makers have to balance. When things are in balance, they got to move it. Okay, and I did promise a mini lesson. Just so you guys don't leave me, your mini lesson is now. So get your notes out and let's learn something today. Now today I'm going to be talking a little bit about option walls. First of all, what are option walls and what do they mean? Well, you heard me mention about that win trade, and we mentioned the imbalance, right, of the chain. And you guys are probably curious, right? Why am I looking at open interest to determine a trade? What am I talking about market makers balance? Well, let me show you. In modern day, you guys probably hear a lot that equities are the underline of options. And why this is true fundamentally, nowadays, option markets are actually starting to control equity markets. And by equity markets, I mean shares. And they're powerful because of the leverage and the meaning of derivatives in the context of the market. So on a fundamental basis, when you buy an options contract, you have the right to purchase 100 shares per contract. Just assuming we buy calls. Well, who do you think's selling you that contract? It is the market makers, and they're taking a great risk by doing so. And the more calls you buy on a level, let's say, the more risk that level is to the market maker. Because they're selling the call and therefore their losses can be infinite. So to counteract that, they sell equity on call level. So mindless Timmy buys 10,000 contracts for calls right here. Well, the market maker is going to have to sell a lot of equity to hedge. And since his contracts expire May 19th, when the price comes into it, we can expect by May 19th, this should be under. Because market makers are going to sell equity, which creates downside pressure, and they don't also want to pay him out. So they're going to do anything to not pay him. Okay, and let's say Big Jim and the twins bought All jokes aside, let's say someone bought a ton of puts on a level for 519. Well, the market makers, they sold that guy the contracts, so they have to buy equity off this level. And so they're buying equity to hedge. Guess what price does when it comes into this large put wall? It bounces off. And so by using the open interest in the options chains, we can actually predict where stocks will close based off of these. Yes, invisible levels that you can predict stocks off of. Would you believe it? Something other than a candlestick. And so when I tell you I'm going to enter you in a different dimension of trader skill, I mean it. Well, why is this useful? Well, almost every month we look at the sectors and map out a plan for them. And so, for example, right here, this is XLK, or the tech sector, the ETF for tech. And what we mapped out here is the call and put wall. And I encourage you guys to save this, but these are your key levels moving forward. Now, with Apple gapping down, the tech sector is around 147.62, which is right in the middle of this put wall. So does that mean we're going to have a crazy bounce? Well, see, where it gets tricky sometimes is sometimes these put and call walls don't actually mean much. Because XLK might not have as much money as something like Apple, which is heavily actually weighted on the call side. So sometimes these won't help you much, but in this case, it is great for setting expectations. Now, the next one is a little more useful. This is XLY, or discretionary. Biggest names in this one you can think of is Tesla. And the main levels here for the put walls are this 143 and 138. So if we do come down and the markets do finally liquidate, let's say down to that 402, 390 area like we talk about, if this stock is around this area, we will bet on this closing higher than some of these levels before May 19th. Because again, it would be unrealistic for market makers to push this down below 138 and then close it before then May 19th, because then they have to pay out all these puts, and that's just a no bueno. So by May 19th, we can expect some support off this 143 as well as this 138. And next up, we have utilities. Now, the major ones on these were pretty spread, but expect major support at 65 and major resistance at 72. And finally, industrials, huge resistance off of this 101, and right down here at this 94 is our big support. So guys, remember, when I'm looking at the options chain, which is once again just where you buy puts and calls on your brokerage, look at the open interest. And you don't want to look at these names like Apple or Microsoft, anything like that. Those big large caps have very distracted chains. You want to look at names like XLK, XLU, these untraded names. Traded enough to where they have value, but not spammed like Tesla or Apple chain. Because there's just too many open interest levels and just huge money moving around. And so when I'm looking at something like this options chain here for the 19th on the resort name like Win, which we actually just made money off of and is still trading, we go here, okay, 120, 118, 115. I'm just going and highlighting all these standout open interest levels. Do I go and highlight 450? No, because this 451 is incredibly small compared to this 8,000 level here. And so we map out, okay, where are the big imbalances, right? Puts and calls. Which side does the market maker favor? Well, obviously there's way more calls on this open interest level than puts. So it's going to be a downside trade, but where do I short off of? Well, we decide that 115 or that 118, because that 115 had a 6,000 open interest level. And this guy bought a bunch of calls for that level like an absolute idiot. But on a real note, look at where the stock rejected, 117. Can't get any more perfect than that, guys. Hopefully you guys learned something from that little mini lesson, but as far as tomorrow, guys, keep in mind the expectations we drew out, the path, the levels, draw all the levels of those call and put walls on your charts for the sectors. And coming up, guys, we are going to start looking long in biotech. Seasonals are rolling around, so you want to take those biotech trades as the seasonality strength is increasing. So right here, take those seasonals, whichever side I'm putting it on right now, there's going to be a lot of strength starting to go into biotech. So I want you guys to look into that XBI ETF. IBB or XBI is typically the best. I'll come up with a more fundamental plan for you guys tomorrow, but definitely be looking into those and understanding that strength in those are coming in soon. And of course, if you guys did enjoy this action-packed lesson of Rader Rambling, please hit that subscribe button. It would make my day. We're so close to 3K, literally 10 subscribers off. And of course, guys, stay happy, stay humble, stay healthy. I'll see you guys in the order books this week.
Never switch sides, like even when I die, I'ma ride for the squad. Let our ties in the